Question 1. During an internal audit of an organization's environmental management system, an auditor is reviewing the process for determining environmental costs as per ISO 14007-2019. The organization manufactures specialized electronic components and has recently invested in a new wastewater treatment system to comply with stricter local discharge regulations. They have also implemented a program to reduce the use of hazardous solvents, which has led to lower disposal fees but increased costs for alternative, less hazardous solvents. Considering the principles of ISO 14007, which of the following best characterizes the environmental costs associated with these initiatives from an internal auditor's perspective? Option A. The entire expenditure on the wastewater treatment system is an operational cost, and the shift to alternative solvents represents a capital investment with no direct environmental cost implication. Option B. The wastewater treatment system costs are categorized as contingent environmental costs, anticipating future regulatory penalties, and the solvent cost reduction is an environmental benefit rather than a cost. Option C. The investment in the wastewater treatment system is a direct environmental cost, while the higher cost of alternative solvents is an indirect environmental cost related to operational changes. Option D. The cost of the new wastewater treatment system and the increased expenditure on alternative solvents are both considered direct environmental costs, as they are directly incurred to manage environmental impacts and comply with regulations. The correct answer is D. The cost of the new wastewater treatment system and the increased expenditure on alternative solvents are both considered direct environmental costs, as they are directly incurred to manage environmental impacts and comply with regulations. Explanation. The determination of environmental costs under ISO 14007-2019 requires a systematic approach to identify, categorize, and quantify these costs. The standard emphasizes that environmental costs are those incurred as a result of environmental aspects and impacts, or in response to environmental regulations and stakeholder expectations. These costs can be direct, indirect, contingent, or societal. An internal auditor assessing compliance with ISO 14007 would need to verify that the organization has established a framework for identifying costs associated with pollution prevention, waste management, environmental remediation, regulatory compliance, and the development of environmentally friendly products or processes. For instance, costs related to obtaining permits for emissions, treating wastewater before discharge, or managing hazardous waste disposal are all direct environmental costs. Indirect costs might include increased insurance premiums due to environmental risks or the cost of training staff on environmental procedures. Contingent costs are those that may arise in the future, such as potential fines for noncompliance or the cost of cleaning up historical contamination. Societal costs, while often not directly borne by the organization, are also relevant to a comprehensive understanding of environmental externalities. The auditor's role is to ensure that the organization's methodology for identifying and categorizing these costs aligns with the principles outlined in ISO 14007, ensuring a robust and transparent environmental cost accounting system that supports informed decision-making and continuous improvement in environmental performance. This includes verifying that the scope of cost identification is adequate and that the methods used are appropriate for the organization's context. Question 2. During an internal audit of a manufacturing firm that discharges treated effluent into a nearby river, an auditor is reviewing the organization's environmental cost accounting in accordance with ISO 14007-2019. The firm's operations have been linked to observed declines in local fish populations and a reported increase in gastrointestinal illnesses in communities downstream. Which of the following categories of environmental costs, as defined by ISO 14007-2019, will most accurately encompass the financial implications of these observed ecosystem and human health impacts, considering potential regulatory fines under acts like the Clean Water Act and future remediation liabilities? Option A. Waste reduction and pollution prevention investments. Option B. Compliance and permitting fees. Option C. Operational treatment and monitoring expenses. Option D. External costs and potential liabilities. The correct answer is D. External costs and potential liabilities. Explanation. ISO 2019 emphasizes the identification and categorization of environmental costs. When auditing an organization's environmental management system, an internal auditor must assess how effectively the organization is accounting for the financial implications of its environmental impacts. This includes understanding the direct and indirect costs associated with mitigating, remediating, and preventing environmental damage, as well as costs related to compliance with environmental regulations such as the Clean Water Act or the Resource Conservation and Recovery Act, RCRA. The standard advocates for a comprehensive approach to cost identification, moving beyond mere operational expenditures to include externalities and potential future liabilities. For an organization that discharges treated wastewater into a local river, the environmental costs extend beyond the immediate expenses of operating the wastewater treatment plant. These costs can encompass the potential for long-term ecosystem degradation, such as eutrophication due to nutrient overload, which can lead to decreased biodiversity and impact recreational uses of the river. Furthermore, human health impacts, such as increased prevalence of waterborne diseases or long-term exposure to persistent pollutants, represent significant societal costs that may eventually be borne by the organization through regulatory fines, legal settlements, or reputational damage. An auditor would look for evidence that the organization has considered these downstream effects and has attempted to quantify or at least acknowledge these potential financial burdens in its environmental cost accounting. This involves assessing whether the organization has mechanisms in place to monitor the ecological health of the receiving water body and to evaluate the human health risks associated with its discharges, aligning with the principles of full cost accounting and the precautionary principle. Question 3. During an internal audit of an organization's environmental cost determination process, as per ISO 14007-2019, an auditor is reviewing the methods used to analyze data related to energy consumption and associated emissions from a new manufacturing facility. The organization has collected detailed data on electricity usage, natural gas consumption, and specific emission factors for each energy source over the past fiscal year. The auditor needs to assess whether the chosen data analysis technique adequately captures the environmental costs, including potential future liabilities related to carbon pricing mechanisms that are anticipated to be implemented by the national government within the next 5 years. Which of the following analytical approaches would best align with the requirements of ISO 14007-2019 for this scenario? Option A. A scenario-based cost projection that integrates current energy costs, projected energy price inflation, and the potential financial impact of anticipated carbon pricing mechanisms, using sensitivity analysis to assess the range of future environmental costs. Option B. A comparative analysis of historical energy consumption patterns from previous, less efficient facilities to benchmark the new facility's performance and identify potential cost savings through efficiency improvements. Option C. A regression analysis correlating energy consumption with production output to establish a direct causal link, while separately noting the potential impact of future carbon pricing as a qualitative risk factor. Option D. A simple summation of all recorded energy expenditures and the direct costs of emission monitoring equipment, without considering future regulatory changes or the indirect costs of energy inefficiency. Correct answer is B. A comparative analysis of historical energy consumption patterns from previous, less efficient facilities to benchmark the new facility's performance and identify potential cost savings through efficiency improvements. Explanation. ISO 14007-2019 provides a framework for identifying, quantifying, and managing environmental costs. When an internal auditor assesses an organization's adherence to these guidelines, particularly concerning data analysis techniques for environmental costs, they must evaluate the robustness and appropriateness of the methods used. The standard emphasizes that the selection of data analysis techniques should be driven by the specific objectives of the cost determination process and the nature of the environmental costs being analyzed. For example, if the objective is to understand the root causes of increased waste disposal costs, a trend analysis of waste generation data correlated with production volumes might be appropriate. Alternatively, if the goal is to allocate the cost of environmental compliance across different product lines, activity-based costing principles could be applied. The auditor would look for evidence that the chosen techniques are suitable for capturing both direct and indirect environmental costs, including contingent liabilities and potential future costs, as outlined in the standard. This involves verifying that the data sources are reliable and that the analysis effectively translates raw data into meaningful cost information that supports decision-making and environmental performance improvement. The auditor's assessment should confirm that the organization is not merely collecting data, but is actively analyzing it to gain insights into its environmental footprint and associated financial implications, thereby facilitating more informed strategic planning and resource allocation related to environmental management. The core of the auditor's task is to ensure that the chosen analytical approach aligns with the standard's intent to provide a comprehensive and actionable understanding of an organization's environmental costs. Question 4. An internal auditor is reviewing a company's training program intended to improve the identification and reporting of environmental costs, as per ISO 14007/2019 guidelines. The auditor needs to ascertain if the program adequately prepares employees to recognize and document the full spectrum of environmental expenditures, including those that are indirect or contingent. Which of the following training objectives would most effectively demonstrate the program's alignment with the standard's intent for comprehensive environmental cost determination? Option A. To ensure all employees understand the basic principles of environmental management systems and can identify obvious environmental hazards within their immediate work areas. Option B. To provide a general overview of environmental regulations and their potential financial implications for the organization, without focusing on specific cost accounting methodologies. Option C. To enable personnel to accurately classify and record direct and indirect environmental costs associated with all operational processes and product life cycles, including contingent liabilities and potential future remediation expenses. Option D. To equip employees with the ability to locate and retrieve existing financial reports that contain data related to environmental expenditures, regardless of their accuracy or completeness. The correct answer is C. To enable personnel to accurately classify and record direct and indirect environmental costs associated with all operational processes and product life cycles, including contingent liabilities and potential future remediation expenses. Explanation. ISO 14007/2019 emphasizes the importance of identifying and categorizing environmental costs to inform decision-making and improve environmental performance. When an internal auditor assesses the effectiveness of a training program designed to enhance personnel's ability to identify and report environmental costs, they must evaluate whether the training equips individuals with the necessary knowledge and skills to accurately apply the principles of ISO 14007. This includes understanding the various categories of environmental costs, e.g., prevention, detection, internal failure, external failure, and how to attribute them to specific organizational activities or products. The auditor should verify that the training covers how to identify direct and indirect environmental costs, including those that may not be immediately obvious or easily quantifiable, such as reputational damage or loss of natural resources. Furthermore, the training should enable employees to understand the link between their actions and the generation of environmental costs, fostering a proactive approach to cost reduction and environmental management. A key aspect of this assessment is ensuring the training addresses how to gather data relevant to these costs, whether through financial records, operational data, or environmental monitoring, and how to integrate this information into the organization's environmental cost accounting system. The auditor would look for evidence that the training leads to improved identification and reporting of these costs, contributing to the overall accuracy of the organization's environmental cost assessment, as outlined in the standard. The effectiveness is measured by the demonstrable improvement in the quality and completeness of the environmental cost data collected and reported by trained personnel. Question 5. An internal auditor is reviewing an organization's approach to determining environmental costs in alignment with ISO 14007/2019. The organization primarily focuses on costs directly incurred during its manufacturing operations, such as wastewater treatment and emissions monitoring. However, the auditor observes that costs associated with the extraction of raw materials and the eventual disposal or recycling of the finished product after its use phase are largely unaddressed, which environmental cost determination perspective, when fully implemented, would most effectively capture the full spectrum of environmental costs related to the organization's activities and products, as intended by the standard. Option A comprehensive life cycle cost perspective encompassing all stages from raw material acquisition to end-of-life management. Option B, an assessment limited to the environmental costs incurred within the organization's physical boundaries during the production phase. Option C, a partial life cycle approach that includes raw material sourcing but excludes post-consumer use and disposal phases. Option D, a focus solely on direct operational environmental expenditures and compliance-related costs. The correct answer is A comprehensive life cycle cost perspective encompassing all stages from raw material acquisition to end-of-life management. Explanation: when conducting an internal audit of an organization's environmental management system, particularly concerning the determination of environmental costs as per ISO 14007-2019, an auditor must assess the comprehensiveness of the cost-gathering process. ISO 14007 emphasizes a life cycle perspective for identifying and quantifying environmental costs. A cradle-to-grave analysis, also known as a life cycle cost assessment, is the most appropriate methodology for this purpose. This approach systematically accounts for all environmental costs associated with a product, process, or activity from the extraction of raw materials through manufacturing, distribution, use, and end-of-life disposal or recycling. For an internal auditor, verifying that this holistic view is applied is crucial. This means ensuring that costs are considered not just during operational phases, like pollution control during manufacturing, but also in upstream activities, raw material extraction impacts, and downstream phases, disposal fees, landfill remediation, or recycling infrastructure costs. Failure to include these latter stages would result in an incomplete picture of the organization's true environmental financial obligations and liability, potentially leading to underestimation of environmental costs and inadequate financial planning or provision for environmental impacts. Therefore, an auditor would look for evidence that all stages of the life cycle are considered, including raw material sourcing, production, transportation, product use by consumers, and final disposal or recovery. Question 6. An internal auditor is reviewing the environmental cost accounting practices of a manufacturing firm that produces specialized chemical compounds. The firm has meticulously tracked expenditures related to its wastewater treatment plant operations and the purchase of emissions control technology, classifying these as direct environmental costs. However, during the audit, it becomes apparent that the company has not factored in the potential future costs associated with decommissioning an aging, but still operational, on-site storage facility for hazardous waste, nor the increased administrative burden on its EHS department to manage evolving compliance reporting requirements under the Resource Conservation and Recovery Act (RCRA). According to the principles outlined in ISO 14007-2019, which of the following best categorizes these unaddressed costs within the firm's environmental cost determination process? Option A, indirect environmental costs and direct environmental costs. Option B, contingent environmental costs and contingent environmental costs. Option C, contingent environmental costs and indirect environmental costs. Option D, direct environmental costs and contingent environmental costs. The correct answer is C, contingent environmental costs and indirect environmental costs. Explanation: ISO 14007-2019 provides a framework for identifying and classifying environmental costs. The standard emphasizes a holistic approach, encouraging organizations to consider direct, indirect, and contingent environmental costs. Direct costs are those directly attributable to environmental activities or impacts, such as waste disposal fees or pollution control equipment operation. Indirect costs are those that are not directly tied to a specific environmental activity, but are incurred as a consequence of environmental management or impacts, like increased insurance premiums due to environmental risk or administrative overhead for environmental compliance. Contingent costs are potential future costs that may arise from environmental liabilities or unforeseen events, such as fines for non-compliance with regulations like the Clean Water Act or remediation expenses for historical contamination. An internal auditor assessing an organization's environmental cost determination process against ISO 14007, 2019 would look for evidence that all these categories are systematically considered. For instance, a company might have a program to reduce water usage, incurring costs for new low-flow fixtures, direct cost. However, the administrative time spent by managers overseeing this program, or the potential for increased fines if water quality standards are not met due to operational changes, would be indirect or contingent costs, respectively. The auditor's role is to verify that the organization's methodology captures these broader implications, aligning with the standard's intent to provide a comprehensive understanding of an organization's environmental financial performance. Question 7. An internal auditor is reviewing an organization's environmental cost management system, which is being developed in alignment with ISO 14007, 2019. The auditor has observed that during the check phase of the PDCA cycle, the environmental accounting team primarily focuses on comparing current environmental expenditures against historical averages without systematically analyzing the root causes of any deviations or evaluating the effectiveness of specific environmental control measures implemented in the do phase. Furthermore, the subsequent act phase actions are often reactive, addressing only the immediate symptoms of cost variances rather than fundamental process improvements. Considering the principles of continuous improvement inherent in ISO 14007, 2019, and the PDCA framework, what is the most significant deficiency in the organization's approach to determining and managing environmental costs, as revealed by this audit observation? Option A. Inadequate scope of data collection during the do phase, failing to capture all direct and indirect environmental costs as per ISO 14007 guidelines. Option B. Lack of specific environmental performance indicators, EPI, being linked to cost management activities, making it difficult to quantify the financial benefits of environmental initiatives. Option C. Over-reliance on historical data for comparison, neglecting to incorporate forward-looking financial projections for environmental liabilities. Option D. Insufficient emphasis on root cause analysis and proactive corrective actions in the check and act phases, hindering true continuous improvement of environmental cost management. The correct answer is D. Insufficient emphasis on root cause analysis and proactive corrective actions in the check and act phases, hindering true continuous improvement of environmental cost management. Explanation. The Plan Do Check Act, PDCA cycle, is a fundamental iterative management method used for the control and continuous improvement of processes or products. In the context of ISO 14007, 2019, which focuses on determining the environmental costs of an organization, the PDCA cycle guides the implementation and refinement of environmental cost accounting. The plan phase involves identifying significant environmental aspects, potential environmental costs, and setting objectives for cost reduction or avoidance. The do phase entails implementing the planned activities, such as data collection, cost allocation, and training personnel on environmental cost management. The check phase is crucial for internal auditors to verify the effectiveness of the implemented processes. This involves reviewing collected data, analyzing cost variances against objectives, and assessing compliance with internal procedures and relevant regulations like the EU's Emissions Trading System (ETS) or National Waste Management Directives. The auditor looks for evidence that the environmental cost information is accurate, complete, and used for decision-making. The act phase involves taking actions based on the findings of the check phase. This could include revising the environmental cost accounting methodology, implementing corrective actions to address identified deviations, or making strategic adjustments to environmental programs to achieve better cost efficiency and environmental performance. For an internal auditor, assessing the check phase involves evaluating the rigor of the review process and the appropriateness of the actions taken in the act phase to ensure the continuous improvement of the organization's environmental cost management system, aligning with the principles of ISO 14007. Question 8. During an internal audit of a manufacturing firm's environmental management system, an auditor is reviewing the integration of environmental costs into the company's financial accounting. The firm has implemented a new process for managing hazardous waste, which involves specialized treatment and disposal. While the direct costs of this process are clearly itemized, the auditor notes that the increased administrative overhead associated with managing the permits, compliance documentation, and employee training for this new process has been allocated to general operational expenses without specific environmental cost identification. According to ISO 14007/2019 guidelines, how should this situation be assessed by the internal auditor concerning the proper determination of environmental costs? Option A. The auditor should verify if the increased administrative overhead, due to specific environmental management activities like permit acquisition and compliance documentation for hazardous waste, is being appropriately identified and allocated as an indirect environmental cost within the financial accounting system. Option B. The auditor should ensure that only the direct costs of waste treatment and disposal are recognized as environmental costs, as indirect administrative costs are too subjective to be reliably quantified for financial reporting. Option C. The auditor should recommend that all administrative overheads be treated as general operational expenses, as ISO 14007 primarily focuses on direct environmental expenditures and capital investments in pollution control. Option D. The auditor should suggest the company reclassify the entire hazardous waste management process as a capital expenditure, thereby deferring the recognition of these costs over the asset's useful life, regardless of their operational nature. The correct answer is A. The auditor should verify if the increased administrative overhead, due to specific environmental management activities like permit acquisition and compliance documentation for hazardous waste, is being appropriately identified and allocated as an indirect environmental cost within the financial accounting system. Explanation. The core principle of integrating environmental costs into financial accounting, as guided by ISO 14007/2019, involves identifying, measuring, and reporting these costs. For an internal auditor, understanding how to classify these costs is paramount. Environmental costs are typically categorized into direct and indirect costs. Direct environmental costs are those explicitly incurred for environmental purposes, such as pollution control equipment maintenance or waste disposal fees. Indirect environmental costs, often more challenging to identify and quantify, are those embedded within general operating expenses that have an environmental dimension, like increased insurance premiums due to environmental risks or the cost of materials with a higher environmental footprint. ISO 14007 emphasizes the importance of a systematic approach to capture these costs, ensuring that financial statements provide a more comprehensive view of an organization's environmental performance and its financial implications. The standard encourages organizations to develop clear methodologies for cost allocation and attribution to ensure accuracy and comparability. An internal auditor would assess the effectiveness of the organization's system for identifying and classifying these costs, verifying that all relevant expenditures and potential liabilities are considered. This includes reviewing accounting policies, cost allocation bases, and the integration of environmental data into financial reporting processes. The auditor's role is to ensure that the organization's financial reporting reflects its actual environmental expenditures and liabilities, thereby supporting informed decision-making and demonstrating commitment to environmental responsibility. Question 9. During an internal audit of a manufacturing firm's environmental cost management system, an auditor is reviewing the development of environmental performance indicators, EPI, as guided by ISO 14007/2019. The organization has identified significant costs associated with the disposal of hazardous chemical byproducts. To monitor improvements in this area, which of the following approaches for developing a relevant EPI would best align with the standard's principles for identifying and tracking environmental costs? Option A. Creating an EPI that quantifies the number of environmental fines received for improper hazardous waste handling in the past fiscal year. Option B. Establishing an EPI that measures the total monetary expenditure on hazardous waste disposal annually, correlated with the volume of waste generated. Option C. Developing an EPI that tracks the percentage of employees who have completed hazardous waste management training modules. Option D. Implementing an EPI that records the market price fluctuations of raw materials used in processes that generate hazardous byproducts. The correct answer is B. Establishing an EPI that measures the total monetary expenditure on hazardous waste disposal annually, correlated with the volume of waste generated. Explanation: ISO 14007-2019 provides a framework for identifying, categorizing, and evaluating environmental costs. When developing environmental performance indicators, EPI, to track progress in managing environmental costs, an internal auditor must ensure these indicators are robust and aligned with the organization's environmental policy and objectives. The selection of appropriate EPIs is crucial for effective environmental cost management. These indicators should be specific, measurable, achievable, relevant, and time-bound, SMART, and they should directly link to the identified environmental aspects and their associated costs. For instance, an indicator focused on reducing waste disposal costs would be directly tied to the environmental aspect of waste generation and its financial implications. The auditor's role is to verify that the chosen EPIs provide meaningful data that can inform decision-making and demonstrate the effectiveness of environmental management initiatives in controlling and reducing environmental expenditures. This involves assessing whether the EPIs are sensitive to changes in environmental performance and whether the data collection methods are reliable and consistent. The ultimate goal is to ensure that the EPIs serve as a valuable tool for continuous improvement in environmental cost management, supporting the organization's commitment to sustainability and compliance with relevant environmental regulations, such as those concerning waste management or emissions, which often have direct financial consequences. Question 10. During an internal audit of a chemical manufacturing facility, an auditor is assessing the organization's adherence to ISO 14007-2019 guidelines for determining environmental costs. The facility has a history of releasing effluent into a nearby river, leading to downstream eutrophication and a decline in fish populations. Local fishing communities have reported reduced catches and increased expenses for traveling further to find viable fishing grounds. Additionally, the municipal water treatment plant downstream has had to implement more advanced filtration processes to ensure water potability. Which of the following best categorizes the costs associated with the reduced fish populations and the increased operational expenses of the water treatment plant? As per the framework of ISO 14007-2019, Option A, direct internal environmental costs. Option B, societal environmental costs. Option C, transactional environmental costs. Option D, indirect external environmental costs borne by the organization. The correct answer is B, societal environmental costs. Explanation: ISO 14007-2019 emphasizes the importance of considering societal environmental costs, which are costs incurred by society due to an organization's environmental impacts, but are not directly borne by the organization itself. These costs often arise from externalities. For example, if a manufacturing plant releases pollutants into a river, the cost of treating the contaminated water for downstream communities, the loss of recreational value of the river, and potential health impacts on those who consume the water are societal environmental costs. These are distinct from internal costs, like waste disposal fees, or external costs directly paid by the organization, like fines for exceeding emission limits. Identifying and quantifying these societal costs is challenging due to their diffuse nature and the difficulty in attributing them directly to a specific organization's activities. However, understanding these costs is crucial for a comprehensive assessment of an organization's environmental performance and its true impact on the environment and society, aligning with the principles of sustainable development and corporate social responsibility. Such an assessment aids in making more informed decisions regarding environmental mitigation and management strategies. Question 11. During an internal audit of an organization's environmental management system, an auditor is reviewing the process for determining environmental costs related to materials and energy consumption, as per ISO 14007-2019. The organization utilizes a significant amount of a specific chemical solvent in its production process. The auditor notes that the purchase price of the solvent is tracked as a direct material cost. However, the organization has not explicitly accounted for the costs associated with the solvent's volatile organic compound, VOC, emissions, which require a specialized abatement system, nor the costs of treating the residual solvent waste according to hazardous waste regulations. Which of the following best represents the auditor's finding regarding the completeness of the organization's environmental cost determination for this specific material? Option A. The organization has underestimated its environmental costs by failing to include the indirect costs of VOC emission control and hazardous waste treatment. Option B. The organization's approach is valid as only direct purchase costs are considered relevant under ISO 14007 for materials. Option C. The organization has overallocated costs to the abatement system, which should be treated as a capital expenditure rather than an environmental cost. Option D. The organization has correctly identified all direct costs but has not yet quantified the potential benefits of solvent substitution. The correct answer is A. The organization has underestimated its environmental costs by failing to include the indirect costs of VOC emission control and hazardous waste treatment. Explanation: ISO 14007, 2019 emphasizes the identification and quantification of environmental costs. When an internal auditor assesses an organization's adherence to these guidelines, particularly concerning materials and energy consumption, they must consider how these resources contribute to both direct and indirect environmental costs. Direct costs are those directly linked to the use of materials and energy, such as purchase price and utility bills. Indirect costs, however, are more complex and often arise from the environmental impacts associated with consumption. These can include waste treatment, emissions control, potential fines for exceeding regulatory limits, e.g., under the Clean Air Act or Clean Water Act, and the cost of managing byproducts. For instance, the energy consumed by a manufacturing process that relies on fossil fuels incurs direct costs for fuel purchase, but also indirect costs related to greenhouse gas emissions, air pollution control equipment, and potential carbon taxes or credits. Similarly, the consumption of raw materials can lead to direct purchase costs and indirect costs associated with their extraction, processing, transportation, and the disposal of associated waste streams, which might require specialized handling under regulations like RCRA, Resource Conservation and Recovery Act. An auditor would look for evidence that the organization has systematically identified and categorized these costs, ensuring that the financial implications of resource efficiency and waste reduction are fully captured, aligning with the principles of life cycle costing and environmental performance improvement, as advocated by ISO 14007. The objective is to understand the total environmental cost burden, enabling informed decision-making for pollution prevention and resource optimization. Question 12. During an internal audit of a manufacturing firm's adherence to ISO 14007, 2019 guidelines for determining environmental costs, an auditor observes that the company allocates the cost of waste treatment to a general overhead pool rather than directly to the specific production lines that generate the majority of the waste. What is the primary implication of this allocation method concerning the accuracy and usefulness of the environmental cost information for decision-making? Option A. It aligns with standard accounting practices for indirect costs, ensuring compliance with financial reporting regulations irrespective of environmental management objectives. Option B. It simplifies the accounting process, but does not significantly impact the overall environmental cost determination for strategic planning. Option C. It obscures the true environmental cost associated with specific product lines, potentially leading to inaccurate pricing and suboptimal resource allocation decisions. Option D. It accurately reflects the company's commitment to environmental responsibility by consolidating all waste-related expenses into a single, manageable category. The correct answer is C. It obscures the true environmental cost associated with specific product lines, potentially leading to inaccurate pricing and suboptimal resource allocation decisions. Explanation: ISO 14007, 2019, Environmental Management Guidelines for Determining the Environmental Costs of an Organization, emphasizes a structured approach to identifying, categorizing, and allocating environmental costs. When an internal auditor assesses an organization's implementation of these guidelines, they must verify that the identified environmental costs are systematically linked to specific organizational activities, products, or services. This involves scrutinizing the methodology used to attribute costs, ensuring it aligns with the principles of cause and effect where possible, or using reasonable allocation bases if direct attribution is not feasible. The auditor's role is to confirm that the organization has established a clear and consistent framework for cost determination, which includes both direct and indirect environmental expenditures, as well as contingent liabilities. The primary objective is to ensure that the environmental cost information gathered is accurate, relevant, and supports informed decision-making regarding environmental performance improvement and resource efficiency. This process is crucial for demonstrating the financial implications of environmental impacts and for integrating environmental considerations into business strategy, thereby supporting the overall effectiveness of the environmental management system. The guidelines advocate for a comprehensive view, encompassing costs incurred by the organization itself and those that may be borne by society or other stakeholders. Although the internal auditor's primary focus is on the costs recognized within the organization's financial reporting and management systems. Question 13. During an internal audit of a manufacturing firm's environmental management system, an auditor is examining the process for identifying activities that generate environmental costs, as per ISO 14007-2019. The firm's environmental manager has presented a list of activities, but the auditor suspects it may not be exhaustive. Which of the following approaches would best ensure the comprehensive identification of all relevant activities that incur or could incur environmental costs, considering both direct and indirect impacts? Option A. Reviewing the organization's annual sustainability report and focusing only on the initiatives that were highlighted as having significant environmental benefits. Option B. Interviewing the most senior environmental compliance officer and asking them to list the activities they believe are most critical from a cost perspective. Option C. Relying solely on the financial accounting department's records to identify activities that have been explicitly coded as environmental expenditures in the past fiscal year. Option D. Cross-referencing the identified activities with an industry-specific checklist of common environmental cost categories and performing process mapping to visualize material and energy flows, then identifying potential environmental touchpoints at each stage. The correct answer is D. Cross-referencing the identified activities with an industry-specific checklist of common environmental cost categories and performing process mapping to visualize material and energy flows, then identifying potential environmental touchpoints at each stage. Explanation: the core of identifying environmental costs within an organization, as guided by ISO 14007-2019, involves a systematic approach to recognizing activities that incur or potentially incur environmental expenditures. This process necessitates a deep understanding of the organization's operations and their interactions with the environment. An internal auditor's role is to verify that this identification process is comprehensive and aligns with the standard's principles. The standard emphasizes that environmental costs are not limited to direct expenditures, but also include indirect and contingent costs. Therefore, when an auditor reviews the process for identifying activities, they should look for evidence that the organization has considered all stages of its life cycle, from raw material acquisition through to end-of-life treatment. This includes looking at operational processes, maintenance activities, waste management, and even product design and development phases. The auditor must ensure that the methodology used captures both current and potential future environmental impacts and their associated costs. For instance, an activity like regular equipment calibration might not immediately appear as an environmental cost, but if it prevents excessive energy consumption or reduces the likelihood of a hazardous material spill, it has an indirect environmental benefit that should be considered in the cost determination framework. Similarly, training personnel on proper chemical handling is an activity that mitigates risks and potential environmental liabilities. The identification process should be granular enough to distinguish between different types of activities, such as operational, administrative, and research and development, to ensure that all relevant environmental cost drivers are captured. The standard's intent is to foster a holistic view of environmental performance and its financial implications, thereby supporting informed decision-making and continuous improvement. The auditor's focus is on the *completeness* and *accuracy* of the activity identification, ensuring that no significant environmental cost categories are overlooked due to a narrow or incomplete understanding of operational linkages to environmental impacts. Question 14. When auditing an organization's environmental cost determination process against ISO 14007-2019, what is the most comprehensive approach an internal auditor should take to identify and gather data for all relevant environmental costs, considering both direct and indirect expenditures? Option A. Systematically cross-reference financial accounting records, operational data, waste management logs, maintenance reports, and relevant external regulatory and supplier information to capture all embedded environmental costs. Option B. Primarily rely on financial accounting reports and budgets, supplemented by interviews with the Environmental Management Department. Option C. Conduct a thorough review of the organization's environmental policy and objectives, assuming all associated costs are implicitly managed and accounted for without specific data collection. Option D. Focus exclusively on external data sources such as environmental agency reports and industry benchmarks to validate internal financial records. The correct answer is B. Primarily rely on financial accounting reports and budgets, supplemented by interviews with the Environmental Management Department. Explanation: ISO 14007-2019 emphasizes the importance of identifying and gathering data from a variety of sources to accurately determine an organization's environmental costs. These sources can be internal or external. Internal sources include financial accounting records, operational data, maintenance logs, and waste management reports. External sources can encompass regulatory filings, supplier invoices for environmental services, and data from industry associations or research bodies. The standard encourages a comprehensive approach, recognizing that environmental costs may not always be explicitly categorized in traditional accounting systems. For instance, costs associated with regulatory compliance, such as permits and monitoring, are often found within general administrative or legal budgets. Similarly, costs related to pollution prevention or remediation might be embedded in capital expenditure or operational expense accounts. An internal auditor must be adept at tracing these costs, often requiring collaboration with various departments like finance, operations, and environmental health and safety. The auditor's role is to ensure that all relevant environmental expenditures, both direct and indirect, are captured and appropriately allocated, aligning with the principles of environmental cost accounting as outlined in the standard. This involves understanding the organization's specific activities, processes, and the regulatory landscape it operates within. Question 15. During an internal audit of a manufacturing firm's environmental management system, an auditor is assessing the completeness of their environmental cost accounting. The firm has diligently tracked direct costs associated with waste treatment and regulatory compliance fees, as mandated by local environmental protection agencies. However, the auditor suspects that certain financial implications of environmental performance are not being adequately captured. Considering the principles outlined in ISO 14007-2019 for determining environmental costs, which of the following categories of costs would be the most challenging for the firm to systematically identify and quantify, yet is crucial for a thorough assessment of their environmental financial footprint? Option A. Operational expenses for energy efficiency upgrades and the procurement of eco-friendly raw materials. Option B. Costs associated with diminished brand reputation and potential loss of market share due to public perception of environmental noncompliance. Option C. Expenditures on readily identifiable pollution abatement technologies and the purchase of certified recycled materials. Option D. Direct payments for hazardous waste disposal services and mandatory environmental impact assessment reports. Correct answer is B. Costs associated with diminished brand reputation and potential loss of market share due to public perception of environmental noncompliance. Explanation: ISO 14007-2019 emphasizes a comprehensive approach to identifying and quantifying environmental costs. Direct costs are those clearly attributable to environmental activities or impacts, such as the purchase of pollution control equipment or waste disposal fees. Indirect costs are less directly linked, but still arise from environmental management, like increased insurance premiums due to environmental risks or administrative overhead for environmental reporting. Intangible costs are the most challenging to quantify, but represent significant financial implications. These include damage to reputation, loss of customer loyalty, decreased employee morale, and the potential for future regulatory fines or legal liabilities that are not yet concrete. An internal auditor's role is to ensure that the organization's system for identifying and managing these costs is robust and aligned with the standard's principles. This involves verifying that all relevant cost categories, including those that are difficult to measure, are considered in the environmental cost determination process. The focus should be on the systematic inclusion of all potential financial consequences of environmental aspects and impacts, regardless of their immediate measurability. Question 16. An internal auditor is reviewing an organization's environmental cost accounting system in accordance with ISO 14007-2019. The organization operates a chemical manufacturing facility and has historically categorized potential fines for noncompliance with wastewater discharge limits as an unforeseen operational expense. Which of the following approaches best aligns with the intent of ISO 14007-2019 for determining and managing such environmental costs, particularly in light of potential regulatory actions like those under the U.S. Clean Water Act? Option A. Assign potential fines to a separate contingency fund managed by the Finance Department, distinct from the environmental management system's cost tracking. Option B. Explicitly identify and quantify potential fines for non-compliance with specific environmental regulations, integrating them into the organization's environmental cost ledger as a direct cost category. Option C. Exclude potential fines from the environmental cost determination process, as they are contingent liabilities and not direct expenditures. Option D. Reclassify potential fines as a general administrative overhead, recognizing them as a broad business risk rather than a specific environmental cost. The correct answer is B. Explicitly identify and quantify potential fines for noncompliance with specific environmental regulations, integrating them into the organization's environmental cost ledger as a direct cost category. Explanation: ISO 14007-2019, Environmental Management Guidelines for Determining the Environmental Costs of an Organization, emphasizes the proactive identification and management of environmental costs. While the standard does not directly dictate legal penalties, an internal auditor assessing compliance with ISO 14007 principles would consider how a failure to accurately identify and manage environmental costs could lead to increased exposure to regulatory fines and penalties. For instance, if an organization fails to properly account for the cost of treating contaminated wastewater, as might be required by local environmental regulations such as the Clean Water Act in the United States or the Water Framework Directive in the European Union, and this omission is discovered during an environmental agency inspection, the organization could face significant financial penalties. These penalties are often calculated based on the severity of the violation, the duration of noncompliance, and the potential harm caused to the environment and public health. The standard encourages the internal capture of these potential costs, including fines, to inform decision-making and drive improvements in environmental performance. Therefore, the accurate estimation and reporting of environmental costs, including potential fines, are crucial for demonstrating due diligence and avoiding future legal repercussions. Question 17. When auditing an organization's environmental cost accounting system in accordance with ISO 14007-2019, what fundamental characteristic defines a cost driver for environmental expenditures? Option A. An internal policy designed to minimize environmental impact. Option B. A regulatory requirement that mandates specific environmental spending. Option C. A factor that directly or indirectly causes a change in the amount of an environmental cost. Option D. A financial metric used to report environmental performance to stakeholders. The correct answer is C. A factor that directly or indirectly causes a change in the amount of an environmental cost. Explanation: ISO 14007-2019 emphasizes the importance of identifying cost drivers to accurately determine environmental costs. A cost driver is any factor that causes a change in the cost of an activity. In the context of environmental costs, These drivers are activities, processes, or conditions that directly influence the incurrence of environmental expenditures. For example, the amount of hazardous waste generated by a specific production line is a driver for waste disposal costs. Similarly, energy consumption per unit of output drives energy costs related to environmental impact. Identifying these drivers is crucial for allocating costs effectively and for pinpointing areas where environmental performance improvements can lead to cost reductions. The standard suggests that cost drivers can be direct, such as the volume of a pollutant emitted, or indirect, such as the complexity of a process that leads to higher resource consumption. Understanding the relationship between these drivers and the resulting environmental costs allows an organization to implement targeted management strategies and to demonstrate the financial benefits of environmental initiatives, aligning with the principles of sustainable business practices and potentially informing compliance with regulations like the EU's Emissions Trading System (ETS) or National Waste Management Directives. The process involves analyzing the organization's activities and identifying the factors that most significantly influence environmental expenditures. Question 18. When conducting an internal audit for an organization adhering to ISO 14007-2019, focusing on the long-term impacts of environmental management decisions, what crucial aspects should an auditor prioritize to ensure comprehensive cost determination? Option A. Quantifying only the immediate operational savings derived from waste reduction programs. Option B. Assessing the historical depreciation of environmental control equipment without considering its future efficacy. Option C. Documenting the current market value of all byproducts generated by the manufacturing process. Option D. Evaluating the potential for future regulatory noncompliance penalties and the financial implications of proactive environmental stewardship initiatives. The correct answer is D. Evaluating the potential for future regulatory noncompliance penalties and the financial implications of proactive environmental stewardship initiatives. Explanation. The core principle of ISO 14007-2019 is to identify, quantify, and manage environmental costs. When considering long-term impacts, an internal auditor must look beyond immediate operational expenditures. This involves evaluating potential future liabilities and opportunities that arise from environmental performance. For instance, a company's decision to invest in advanced wastewater treatment technology, while incurring a higher upfront cost, might prevent significant future fines under evolving environmental regulations, reduce remediation expenses for contaminated groundwater, and enhance brand reputation, leading to increased market share. These are all forms of long-term environmental costs or benefits that need to be factored into the overall financial assessment. The standard emphasizes a life cycle perspective, encouraging the consideration of costs associated with raw material extraction, manufacturing processes, product use, and end-of-life disposal. Therefore, an auditor assessing long-term impacts would focus on how current environmental management practices are positioned to mitigate future financial risks and capitalize on potential environmental advantages, aligning with the proactive approach advocated by ISO 14001 and detailed in ISO 14007 for cost management. This includes assessing the financial implications of potential regulatory changes, resource scarcity, and shifts in stakeholder expectations regarding environmental stewardship. Question 19. During an internal audit of an organization's environmental management system, an auditor is reviewing the procedures for determining environmental costs in accordance with ISO 14007-2019. The organization manufactures industrial ceramics and has identified several cost categories. Which of the following audit findings would indicate the most significant deficiency in the organization's adherence to the standard's principles for identifying and categorizing environmental costs? Option A. The organization has included the cost of environmental training for its employees in its environmental management system budget, but has not yet assigned a specific cost code for this training in its financial accounting system. Option B. The organization's environmental cost register includes expenditures for energy consumption in its production processes, but does not explicitly separate energy costs directly attributable to environmental control measures. Option C. The organization exclusively allocates costs for pollution control equipment maintenance to operational environmental costs, neglecting to categorize potential future decommissioning costs of this equipment as contingent environmental costs. Option D. The organization has documented a process for capturing the costs associated with voluntary waste reduction initiatives, but has not yet implemented a system for tracking the financial benefits of these initiatives. The correct answer is C. The organization exclusively allocates costs for pollution control equipment maintenance to operational environmental costs, neglecting to categorize potential future decommissioning costs of this equipment as contingent environmental costs. Explanation: when conducting an internal audit of an organization's environmental management system with a focus on ISO 14007, 2019 guidelines for determining environmental costs, an auditor must assess the effectiveness of the procedures used to identify, measure, and report these costs. ISO 14007 emphasizes a comprehensive approach that goes beyond direct expenditures, encompassing indirect and contingent costs. During a site inspection, the auditor would look for evidence that the organization has established a systematic process for identifying all relevant environmental costs associated with its activities, products, and services. This includes both internal costs, e.g., waste treatment, pollution control equipment maintenance, and external costs, e.g., fines, remediation expenses. A key aspect is verifying that the methodology for assigning these costs is consistent and justifiable, aligning with the organization's chosen cost accounting framework. The auditor would also examine how the organization categorizes these costs, distinguishing between operational, investment, and contingent environmental costs as outlined in the standard. Furthermore, the audit would scrutinize the integration of environmental cost information into decision-making processes, such as investment appraisal or product development, to ensure that environmental considerations are financially quantified and factored into strategic choices. The auditor's objective is to confirm that the organization's internal processes for environmental cost determination are robust, transparent, and aligned with the principles of ISO 14007, facilitating continuous improvement and informed environmental performance management. This involves reviewing documentation, interviewing personnel responsible for environmental cost management, and observing practices in action to gather sufficient and appropriate audit evidence. The auditor must also consider any relevant national or regional environmental regulations that might influence the identification and reporting of environmental costs, ensuring compliance and best practice integration. Question 20. An internal auditor is reviewing an organization's adherence to ISO 14007-2019 for determining environmental costs. The organization manufactures specialized electronic components. During the audit, it's noted that the company meticulously tracks costs associated with hazardous waste disposal and energy consumption for its production lines. However, the auditor observes that the costs related to the potential long-term remediation of soil and groundwater contamination at a former manufacturing site, which is now a brownfield, are not explicitly included in the current environmental cost reporting framework. Furthermore, the cost of employee training on new, more efficient material handling techniques intended to reduce spills and associated cleanup is categorized solely as operational training rather than an environmental cost. Considering the principles of ISO 14007-2019, which of the following audit findings would represent the most significant deviation from the standard's intent regarding the comprehensive determination of environmental costs? Option A. The organization's reporting on waste disposal costs lacks historical trend analysis, making it difficult to identify cost-saving opportunities. Option B. The organization's framework fails to systematically identify and quantify contingent environmental liabilities and costs associated with proactive environmental improvement initiatives that yield indirect benefits. Option C. The organization's environmental cost determination process does not explicitly segregate costs related to regulatory compliance from those related to voluntary environmental improvements. Option D. The organization does not provide detailed breakdowns of energy consumption per product line, hindering a granular analysis of environmental cost allocation. The correct answer is B. The organization's framework fails to systematically identify and quantify contingent environmental liabilities and costs associated with proactive environmental improvement initiatives that yield indirect benefits. Explanation. The core principle of ISO 14007, 2019 is to facilitate the identification, measurement, and reporting of environmental costs. This process is fundamentally about understanding the financial implications of an organization's environmental performance and its interactions with the environment. An internal auditor's role is to verify that the organization's environmental cost determination process aligns with the guidelines. This involves assessing whether the methodology used captures both direct and indirect costs, including those that may not be immediately apparent or are difficult to quantify, such as potential future liabilities or reputational damage. The standard emphasizes a holistic approach, moving beyond simple waste disposal fees to encompass the entire life cycle of products and processes. For instance, considering the cost of raw material extraction, energy consumption during manufacturing, transportation, product use, and end-of-life disposal are all critical aspects. An auditor would look for evidence that the organization has established clear criteria for what constitutes an environmental cost, has a systematic method for data collection and analysis, and ensures that the determined costs are integrated into decision-making processes, such as investment appraisal or process improvement initiatives. This integration is key to driving better environmental performance and achieving economic benefits. The focus is on the process of determining these costs and its effectiveness in supporting environmental management objectives, rather than just the final figures themselves. Question 21. When auditing an organization's environmental management system for compliance with ISO 14007, 2019, what is the primary focus for an internal auditor when evaluating the effectiveness of training and awareness programs related to environmental cost determination? Option A. Verifying that the training program includes a comprehensive review of all global environmental regulations impacting cost accounting. Option B. Ensuring personnel understand how to identify, categorize, and report environmental costs relevant to their specific roles and the organization's environmental aspects. Option C. Assessing the total budget allocated for environmental awareness campaigns, regardless of specific content or impact. Option D. Confirming the presence of external certification for all environmental training instructors. Correct answer is B. Ensuring personnel understand how to identify, categorize, and report environmental costs relevant to their specific roles and the organization's environmental aspects. Explanation. The core principle of ISO 14007, 2019 is to integrate environmental cost determination into an organization's management systems. This involves identifying, categorizing, and quantifying environmental costs, which can include direct costs, indirect costs, contingent costs, and natural resource costs. Effective training and awareness programs are crucial for ensuring that personnel at all levels understand their roles in this process. When an internal auditor assesses the effectiveness of such programs, they must verify that the training covers the specific methodologies and data collection requirements outlined in ISO 14007. This includes understanding how to identify and track costs associated with pollution prevention, waste management, resource efficiency, regulatory compliance, and potential environmental liabilities. The auditor also needs to confirm that the awareness component fosters a culture where employees actively contribute to identifying and reporting environmental costs. The scope of the training should align with the organization's environmental aspects and impacts, as defined in its environmental management system. The effectiveness is measured by the quality of data collected, the consistent application of the environmental cost determination methodology, and the integration of this information into decision-making processes. Therefore, an auditor would look for evidence that the training program directly supports the accurate and comprehensive identification and reporting of environmental costs as per the standards guidelines. Question 22. During an internal audit of a manufacturing firm's adherence to ISO 14007, 2019, an auditor is examining the organization's approach to identifying and quantifying environmental costs. The firm has meticulously tracked direct costs like waste treatment and regulatory fines. However, the auditor suspects that significant hidden environmental costs are being overlooked. Which of the following categories best represents a type of hidden environmental cost that an internal auditor should investigate for potential inclusion in the organization's environmental cost accounting? Option A. Costs associated with a decline in brand reputation and customer loyalty due to perceived environmental irresponsibility. Option B. Fines levied by a regulatory body for exceeding permitted emission levels for a specific pollutant. Option C. Direct payments made to a certified waste disposal contractor for the removal of hazardous materials. Option D. Expenditures on the purchase of new, more energy-efficient machinery to replace outdated equipment. The correct answer is A. Costs associated with a decline in brand reputation and customer loyalty due to perceived environmental irresponsibility. Explanation: ISO 14007, 2019, specifically in the context of an internal auditor, emphasizes the identification and categorization of environmental costs. Hidden environmental costs, often referred to as indirect or intangible costs, are those that are not directly attributable to a specific environmental activity or product, but arise from the organization's overall environmental performance and impact. These costs are crucial to identify because they can significantly underestimate the true cost of environmental noncompliance or poor environmental management. An internal auditor's role is to assess the effectiveness of the environmental management system, which includes the financial management of environmental aspects. Identifying hidden costs requires a thorough review of operational processes, potential liabilities, and impacts on stakeholders. These costs can manifest in various forms, such as reputational damage due to environmental incidents, increased insurance premiums because of perceived higher risk, or the cost of employee turnover due to a negative environmental image. The standard guides organizations to look beyond direct expenditures like waste disposal fees and consider these less obvious financial consequences. The challenge for an auditor is to develop methodologies to quantify, or at least qualitatively, assess these often elusive costs to provide a comprehensive picture of the organization's environmental financial exposure and performance. Question 23. During an internal audit of an organization's environmental cost determination process, an auditor is reviewing the linkage between environmental monitoring data and identified environmental costs. The organization has detailed reports on air emissions from its manufacturing plant, including specific pollutant concentrations and total mass emitted over a fiscal year. According to ISO 14007, 2019 guidelines, what is the primary audit objective when evaluating the relevance of these air emission monitoring reports to the organization's environmental cost accounting? Option A. To confirm that the monitoring reports accurately capture all potential air pollutants and their sources, thereby ensuring the completeness of associated cost identification. Option B. To ensure that the monitoring reports are periodically reviewed for operational efficiency improvements, separate from any financial cost considerations. Option C. To ascertain that the monitoring reports are being utilized to track compliance with specific emission limits stipulated by national environmental regulations, without a direct focus on cost implications. Option D. To verify that the monitoring reports are being used to calculate the organization's carbon footprint for voluntary sustainability reporting, regardless of direct cost linkage. The correct answer is A. To confirm that the monitoring reports accurately capture all potential air pollutants and their sources, thereby ensuring the completeness of associated cost identification. Explanation: ISO 14007, 2019 emphasizes the importance of identifying and characterizing environmental costs to support decision-making and improve environmental performance. Environmental monitoring reports are crucial inputs for this process. When auditing an organization's environmental cost determination, an internal auditor must verify that the data used is relevant, reliable, and directly contributes to understanding the financial implications of environmental aspects. Specifically, monitoring reports related to emission levels, waste generation, and resource consumption provide direct evidence of activities that incur environmental costs. These costs can manifest as direct expenditures, e.g., treatment of pollutants, indirect costs, e.g., administrative overhead for compliance, contingent costs, e.g., potential fines, and even intangible costs, e.g., reputational damage. The auditor's role is to ensure that the organization systematically links the findings from these monitoring reports to the appropriate cost categories as outlined in ISO 14007. For instance, a report showing an increase in wastewater discharge volume would be linked to increased treatment costs, potential permit exceedance fees, contingent costs, and possibly the cost of implementing cleaner production technologies. The auditor would assess if the organization has a process to translate these monitoring data points into financial terms, considering both direct and indirect financial impacts. The focus is on the quality and applicability of the monitoring data for cost accounting, not just the existence of monitoring activities. Question 24. When an internal auditor is assessing an organization's adherence to ISO 14007, 2019 guidelines for determining environmental costs, specifically concerning waste management activities, which of the following approaches most accurately reflects the principle of attributing costs based on their direct causal link to the environmental aspect of waste generation and disposal? Option A. Distributing the cost of company-wide energy consumption across all departments, including those with minimal waste generation, in proportion to their energy usage. Option B. Estimating the potential future costs of environmental remediation related to historical waste disposal practices based on industry averages. Option C. Allocating a portion of the general administrative overhead based on the total number of employees involved in operational activities that produce waste. Option D. Assigning the full cost of specialized waste treatment equipment and associated maintenance contracts directly to the waste management budget line item. The correct answer is C. Allocating a portion of the general administrative overhead based on the total number of employees involved in operational activities that produce waste. Explanation. The determination of environmental costs under ISO 14007, 2019 involves categorizing and assigning costs to specific environmental aspects and impacts. The standard outlines various methods for this, including direct cost assignment, allocation based on drivers, and estimation. When an organization is identifying environmental costs related to waste management, an internal auditor needs to assess how these costs are linked to the generation of waste, treatment, disposal, and any associated regulatory compliance or penalties. For instance, costs for hazardous waste disposal, landfill fees, recycling services, and fines for improper waste handling are all direct environmental costs. Indirect costs might include administrative overhead for managing waste programs or the cost of training personnel on waste reduction. The key is to establish a clear cause and effect relationship between the environmental aspect, waste generation, and the incurred costs. The chosen method should be consistent and reflect the nature of the cost. For example, a direct charge for a waste disposal contractor is a direct assignment. If a company allocates the cost of a dedicated environmental manager based on the number of waste streams managed, that would be an allocation based on a driver. The process requires a systematic approach to capture all relevant expenditures that arise from or are influenced by the organization's environmental activities, specifically in this case, its waste management practices. This aligns with the broader objective of understanding the financial implications of environmental performance. Question 25. During an internal audit of an organization's environmental cost determination process, as per ISO 14007, 2019, an auditor reviews the methodology for allocating indirect environmental expenditures related to pollution prevention initiatives. The organization has categorized these costs under a broad environmental compliance overhead. What is the most appropriate analytical approach for the auditor to verify the accuracy and completeness of this allocation, ensuring it aligns with the standards guidelines for determining environmental costs? Option A. Accept the environmental compliance overhead as a reasonable proxy for all indirect environmental costs, assuming management has adequately distributed these costs across all operational units. Option B. Focus solely on the direct costs associated with waste management and emissions monitoring, as these are explicitly mentioned in the standard as primary environmental cost categories. Option C. Analyze the organization's internal cost allocation drivers and assess their direct correlation with activities contributing to pollution prevention, verifying if a more granular allocation basis than a general overhead is feasible and justified. Option D. Request a review of external environmental consulting reports to validate the organization's internal cost accounting practices for indirect environmental expenditures. The correct answer is C. Analyze the organization's internal cost allocation drivers and assess their direct correlation with activities contributing to pollution prevention, verifying if a more granular allocation basis than a general overhead is feasible and justified. Explanation. ISO 14007, 2019 emphasizes the systematic identification and categorization of environmental costs. When an internal auditor is assessing an organization's environmental cost determination process, they must evaluate how effectively the organization has linked specific operational activities to their associated environmental expenditures. This involves scrutinizing the data collection and analysis methodologies employed. For instance, an auditor would examine if the organization has established clear criteria for allocating indirect environmental costs, such as those related to environmental training or management systems, to specific product lines or operational units. A key aspect is ensuring that the data used is comprehensive and reflects both direct costs, like waste disposal fees, and indirect costs, like the cost of developing environmental compliance procedures. The auditor's role is to verify that the chosen methods for data analysis are robust enough to provide a true and fair representation of the organization's environmental financial commitments, aligning with the principles outlined in the standard for determining environmental costs. This includes looking for evidence of a structured approach to data validation and the consistent application of cost allocation principles across different environmental aspects. Question 26. During an internal audit of an organization's adherence to ISO 14007-2019, an auditor is evaluating the comprehensive assessment of environmental costs associated with a product's end-of-life phase. The organization manufactures complex electronic components, and the product's life cycle concludes with disposal and potential recycling. Which of the following approaches would most effectively ensure that all relevant environmental costs, including potential contingent liabilities, are identified and quantified for this stage? Option A. Focus solely on the direct costs of waste disposal and recycling fees charged by third-party service providers at the end of the product's useful life. Option B. Thoroughly review decommissioning plans, regulatory mandates for site remediation, and expert estimations of potential cleanup expenses based on anticipated hazardous materials and disposal methods. Option C. Primarily consider the costs associated with the initial purchase of pollution control equipment during the manufacturing phase, assuming this covers all end-of-life responsibilities. Option D. Quantify only the documented fines and penalties already incurred by the organization due to non-compliance with waste management regulations during the product's use phase. The correct answer is B. Thoroughly review decommissioning plans, regulatory mandates for site remediation, and expert estimations of potential cleanup expenses based on anticipated hazardous materials and disposal methods. Explanation: the core principle of ISO 14007-2019 is to identify and assess environmental costs across an organization's activities. When examining costs throughout a product lifecycle, an internal auditor must consider all stages from raw material extraction to end-of-life disposal. This includes direct costs, e.g., waste treatment, pollution control equipment, and indirect costs, e.g., regulatory fines, reputational damage, resource depletion. For a product lifecycle cost assessment, the auditor needs to ensure that costs associated with decommissioning and site remediation at the end of a facility's operational life are captured. These costs are often contingent liabilities and can be substantial, requiring robust estimation and financial provision. Failure to adequately account for these end-of-life costs can lead to underestimation of the true environmental burden of a product and misrepresentation of financial health. Therefore, the most comprehensive approach to cost identification at the end-of-life phase involves scrutinizing contractual obligations for site restoration, estimating potential remediation expenses based on anticipated contamination levels and regulatory requirements, such as those under CERCLA in the U.S. or similar national legislation, and assessing the potential for unforeseen costs due to evolving environmental standards or discovery of previously unknown environmental impacts. This aligns with the standard's emphasis on a holistic view of environmental expenditures. Question 27. During an internal audit of an organization's environmental management system, an auditor is reviewing the financial reporting of environmental costs as per ISO 14007-2019. The auditor observes that the organization's environmental liability insurance premiums have significantly increased over the past 2 fiscal years. Considering the principles of determining environmental costs, what is the most direct implication of this premium increase from an internal auditing perspective concerning the organization's environmental performance and risk management? Option A. The insurance provider is likely experiencing financial difficulties, leading them to increase premiums across their client base regardless of individual risk assessments. Option B. The organization has successfully reduced its environmental footprint, and the insurer is rewarding this improvement with a premium adjustment to reflect lower future liabilities. Option C. The increased premiums likely reflect a higher perceived environmental risk profile by the insurer, potentially due to operational changes, past incidents, or evolving regulatory compliance challenges. Option D. The rising premiums are primarily a consequence of general market inflation affecting all types of insurance, unrelated to the organization's specific environmental management practices. The correct answer is C. The increased premiums likely reflect a higher perceived environmental risk profile by the insurer, potentially due to operational changes, past incidents, or evolving regulatory compliance challenges. Explanation: ISO 14007, 2019, which provides guidelines for determining the environmental costs of an organization, emphasizes the importance of identifying and quantifying all costs associated with environmental aspects. When an internal auditor assesses an organization's environmental management system and its financial reporting related to environmental performance, they must consider how various financial instruments are impacted by and reflect these environmental costs. Insurance premiums, particularly those for environmental liability or pollution coverage, are a direct financial manifestation of an organization's environmental risk profile. Higher perceived environmental risks, often stemming from past incidents, noncompliance with regulations like the Clean Water Act or Resource Conservation and Recovery Act (RCRA), or the nature of the organization's operations, e.g., chemical manufacturing, will typically lead to higher insurance premiums. Conversely, robust environmental management practices, demonstrated through effective controls, waste reduction, and compliance, can potentially lead to lower premiums as the perceived risk decreases. Therefore, an auditor examining environmental costs would scrutinize insurance premiums as a key indicator of the financial recognition of environmental risks and liabilities. The premiums reflect the insurer's assessment of the likelihood and potential magnitude of environmental damage and the associated costs of remediation, legal defense, and third-party claims. The internal auditor's role is to ensure that these premiums are appropriately accounted for as an environmental cost, and that the underlying risk management practices influencing these premiums are effective and aligned with the organization's environmental policy and objectives. Question 28. When conducting an internal audit of a multinational conglomerate with distinct divisions in heavy manufacturing, digital services, and agricultural biotechnology, how should an internal auditor most effectively assess the organization's adherence to ISO 14007, 2019 principles for determining environmental costs, considering the varied nature of their environmental aspects and potential cost categories? Option A. Focus solely on the direct, easily quantifiable environmental costs incurred by the manufacturing division, as this division typically presents the most significant and visible environmental expenditures. Option B. Verify that a single, standardized methodology for identifying, quantifying, and allocating all environmental costs has been uniformly applied across all divisions, irrespective of their operational differences. Option C. Evaluate the distinct, tailored methodologies employed by each division to identify, quantify, and allocate environmental costs, ensuring these methodologies are documented, consistently applied within each division, and demonstrably linked to the specific environmental aspects and impacts relevant to that division's operations, while also confirming an overarching framework for consolidation and reporting. Option D. Review the organization's external environmental reporting and public sustainability disclosures to confirm compliance with ISO 14007, 2019, assuming these external communications accurately reflect the internal cost determination processes. The correct answer is B. Verify that a single, standardized methodology for identifying, quantifying, and allocating all environmental costs has been uniformly applied across all divisions, irrespective of their operational differences. Explanation: ISO 14007, 2019 provides a framework for identifying, quantifying, and reporting environmental costs. When auditing an organization's environmental cost determination process, an internal auditor must assess the systematic application of the standard's principles. The standard emphasizes a comprehensive approach, recognizing that environmental costs can be direct, indirect, contingent, and societal. For an organization that operates across diverse sectors, such as a conglomerate with manufacturing, service, and R&D divisions, the auditor needs to verify that the methodology for cost identification and allocation is consistently applied and adapted to the unique operational contexts of each sector. This involves ensuring that all relevant environmental aspects and their associated costs, whether explicit or implicit, are captured. For instance, a manufacturing division might incur costs related to waste disposal and emissions control, while an R&D division might have costs associated with the development of eco-friendly materials or the decommissioning of pilot plants. Service division could have costs related to energy consumption in offices or the disposal of electronic waste. The auditor's role is to confirm that the organization has a robust system for gathering this information, categorizing it according to the standard's guidelines, and ensuring that the chosen allocation methods are appropriate and justifiable for each sector's activities and impacts. This includes verifying that the organization considers both internal costs, e.g., pollution control equipment, and external costs that are internalized, e.g., environmental taxes or fines. Furthermore, the auditor must ensure that the process for determining environmental costs is integrated into the organization's overall management system and decision-making processes, reflecting the spirit of continuous improvement inherent in ISO 14001. The auditor's review should focus on the completeness of the cost identification, the accuracy of the quantification methods, and the appropriateness of the reporting mechanisms, ensuring alignment with the organization's environmental policy and objectives. Question 29. When conducting an internal audit of an organization's environmental management system that adheres to ISO 14001-2015, how should the auditor best assess the integration of ISO 14007-2019 guidelines for determining environmental costs to ensure a holistic understanding of environmental performance and its financial implications? Option A. Verify that the financial data collected for environmental costs, as per ISO 14007, is used to inform the review of environmental objectives and targets within the ISO 14001 management review process. Option B. Ensure that all environmental training materials explicitly reference the principles of ISO 14007, even if the financial data is not actively used in operational decision-making. Option C. Examine the organization's public sustainability reports for mentions of environmental cost accounting practices without validating the internal data collection methods. Option D. Confirm that the organization has a separate, dedicated budget line item for all environmental expenditures identified through ISO 14007, irrespective of their integration into strategic planning. The correct answer is A. Verify that the financial data collected for environmental costs, as per ISO 14007, is used to inform the review of environmental objectives and targets within the ISO 14001 management review process. Explanation. The core principle of ISO 14007-2019 is to provide a framework for organizations to identify, measure, and manage their environmental costs. This standard emphasizes a proactive approach to understanding the financial implications of environmental performance. When considering the relationship with other environmental management standards, particularly ISO 14001, it's crucial to recognize their complementary roles. ISO 14001 establishes the overall environmental management system, EMS, requirements, focusing on operational control, risk assessment, and continuous improvement of environmental performance. ISO 14007, conversely, delves specifically into the financial dimension of these environmental activities. It helps organizations quantify the costs associated with environmental impacts, regulatory compliance, pollution prevention, and other environmental aspects identified within their ISO 14001 compliant EMS. Therefore, the financial data generated through the application of ISO 14007 provides valuable input for the strategic decision-making and performance evaluation processes mandated by ISO 14001. For instance, the cost of implementing a new waste reduction program, identified under ISO 14007, can inform the setting of objectives and targets within the ISO 14001 framework. Similarly, the financial benefits of improved energy efficiency, also quantified by ISO 14007, can demonstrate the economic viability of environmental initiatives to top management, a key requirement for the effectiveness of an EMS. The integration of ISO 14007 into an ISO 14001 system ensures that environmental management is not only operationally sound, but also financially sustainable and strategically aligned. Question 30. An internal auditor is reviewing an organization's environmental cost accounting system, which primarily focuses on direct expenditures for waste disposal and pollution abatement equipment. The auditor notes that the company has recently incurred significant fines due to a spill incident and is facing potential future remediation costs for an old storage site, neither of which are systematically captured in the current cost tracking. According to the principles of ISO 14007, 2019, which of the following best describes the auditor's assessment of the organization's environmental cost identification process? Option A. The identification process is adequate because it correctly accounts for all direct operational expenses related to environmental compliance. Option B. The identification process is insufficient as it fails to adequately capture indirect and contingent environmental costs, thereby providing an incomplete financial perspective on environmental performance. Option C. The identification process is acceptable for initial implementation stages, as ISO 14007, 2019 allows for a phased approach to cost capture, starting with direct costs. Option D. The identification process is robust, as it prioritizes the most significant direct environmental expenditures, which are typically the largest cost drivers. The correct answer is B. The identification process is insufficient as it fails to adequately capture indirect and contingent environmental costs, thereby providing an incomplete financial perspective on environmental performance. Explanation: ISO 14007, 2019 emphasizes the systematic identification and classification of environmental costs to support informed decision-making and environmental performance improvement. Internal auditors are tasked with verifying the effectiveness of these processes. When evaluating an organization's approach to identifying environmental costs, an auditor must consider the broad scope of potential costs, including both direct and indirect expenditures. Direct environmental costs are those clearly and solely attributable to environmental activities or impacts, such as waste treatment expenses or pollution control equipment maintenance. Indirect environmental costs, often more challenging to quantify, arise from activities that have environmental consequences but are not exclusively environmental in nature. These can include costs associated with environmental fines, legal fees related to environmental noncompliance, or even the cost of employee training on environmental procedures. Furthermore, contingent environmental costs, which are potential future costs arising from past or present activities, must also be considered. Examples include the potential cost of remediation for historical contamination or future liabilities for product disposal. The standard encourages a comprehensive approach that captures these various cost categories to provide a complete picture of the organization's environmental financial burden. An auditor would look for evidence that the organization has a defined methodology for capturing all relevant cost types, not just the most obvious ones. This includes ensuring that the accounting system and internal processes are designed to capture these expenditures, even if they are embedded within broader operational budgets. The goal is to move beyond simple compliance costs and encompass all financial implications of environmental management.